So just on Thursday, on the 30th of July, right, we saw all the three Singapore SG banks, right, DBS, OCBC and UOB selling down by more than 4 to 5% in just one day, right? So I have a lot of people asking me, hey Joey, what is the outlook for the banks, right? Can we still see more weakness, right? Is it time to buy now, right? And this is what will be covered in today's video, right? But before I go into the charts, let's take a look at what is happening to the banks. Why are they selling down by more than 4 to 5% in just one day? Hey guys, Joey here, top tier reminds here in Philips Securities and Chief Trainer at Trading Impossible. This is a Business Times article, alright, hot stocks. DBS, OCBC and UOB tumble after MAS asked to cap dividend, right? So what happens was this on Wednesday night, right? The MAS on Wednesday called on Singapore banks, right, to cap their total dividends per share, right, for the full year 2020 at 60 cents per share. Alright, so they offer shareholders an option to either receive it in cash or scrip. Right, so this is kind of a move, alright, to kind of ensure that lenders or the banks are able to continue supporting businesses and individuals, right, in the wake of the current COVID-19 situation. Right, so in terms of this news, you can see that of course it's a bearish news, right? That's why the banks sold off. But why is it bearish in the first place? So what happens is many of these banks, right, their theme of investment, right, is pretty much on the dividend yield, right? Let's take a look at this analyst, what this analyst is saying, right? Look at this, right? So at DBS, analyst Lim Raywen, right, one of the analysts in DBS actually kind of say that, we believe that Singapore's bank's valuations is now trading at about 0.8 to 1 time, alright? So it's pretty much supported by relatively high dividend yields, right? But these support levels could be pushed down by MAS latest move, which implies, right, a lower DPS, right, translating to a lower dividend yield of about 3.6 to 3.9% compared with previously forecast of 5.2 to 6.5%. So banks are pretty much seen like a dividend play, long-term play, yield of more than 5 to 6%. But right now, because of this cap by MAS, right, their yield could potentially be lower, about probably about 3 to 4%, and that's the lower dividend yield. Alright, so investors might want to use this opportunity to probably unload some of these shares if they're looking for yield and probably move on to other counters which pays a higher dividend yield. Alright, so look at this, right? So Citi said that the latest development will be viewed as a negative for the banks, as their dividend yields are considered an important component of the investment thesis of owning these names. So basically, when people buy the banks, they want to have the yield, they want to get a dividend, right? But now with MAS having this cap on dividend, it might not be so attractive as a dividend play already, right? So that's the reason why the banks sold off as well. So let's go on to the question: is it time to buy the banks right now, or should we wait for more selling or let it go down to certain support levels, then we start to buy again? Alright, let's take a look at the charts right now for the three banks: DBS, UOB and OCBC. So before I move on, be sure to hit the thumbs up button, give me a like, alright, so it will help YouTube algorithm reach out to more people, and thank you so much for doing that, right? So this is DBS right over here as of the 31st of July, end of July, alright? The market has closed for the week, alright, and we are now heading into a long weekend, and next week will be in August 2020, right? So time flies, right? So this is DBS right over here, and you can see that on Thursday, right, on the 30th of July, as I mentioned, it kind of fell by more than 4 to 5%. Look at this right over here. We are currently trading at about $19.77. So you can see that all this while, right, since May, right, since June, we kind of broke above that $20 level, all right, kind of headed to a high of about 22, 23, and that's where some profit taking started to happen again. You can see that in terms of the mid to long term trend, I've done videos on these banks before. You can see that the trend is pretty much down in the mid to long term. As I say, every time it pushes up, that's where sellers might come back again to take some profit, and potentially there might be some weakness, right? So it's been pushing down, and over the past, I would say 1 month, all right, we've been finding a bit of support at about $20.50, right around here, $20.50, right? But of course, that $20 psychological support level is key. Alright, so apart from the trend being down in the mid to long term, we have kind of broke down below this $20 psychological level. Look at this, right? So prices have kind of like gone down below this $20 psychological support level, and also this red line is the downward sloping 100 days moving average, so kind of like pushing back down below this red line. So not a good sign in terms of the trend as well. And in terms of the moving average for the short term, look at this green line. All right, it was like pretty much moving sideways for a while, and you can see that now it might start to like turn down a bit. So not a good thing in terms of the short term. term as well, especially if we stay below this $20 support level. Of course, if we can come back up, that's a good thing, but if it stays below $20, which is the case right now because it kind of closed at 1977, which is below 20, all right, then we might start to see a bit more short-term weakness, right? To where? Let's take a look, right? So we might potentially see a bit of weakness coming into about $19 to $18.50. You can see that $18.50 was the support that was holding all the while in April, all right? So we might start to see a bit of short-term weakness probably towards $19 to $18.50. So we might start to see more selling before buyers start to come back. So I think if you're looking to buy DBS, you probably have to wait to see some stability. Normally you want to get in at some of these good support levels that has been holding for the past 3 to 4 months, like that $18.50 to $19. I think that could be a good level to start accumulating on dips if you are really going for the longer term. All right, $18.50 near then. After $18.50, that would be about the $17. All right, so same thing like I've mentioned in other videos, you want to nibble some along the way down. You don't just want to whack in all, right? Because if that support were to break down, we might start to see a bit more weakness as well, because as I say, the trend might still be down. But of course, in the short term, we can still see any potential rebounders like we have seen in June. All right, so it can be a good opportunity to start to load up on some of these banks as it nears some of these support levels like the $18.50 for DBS. So this is UOB right over here as of the 31st of July 2020, right? End of the month already. Look at it. So look at this right over here. So we kind of close at about $19.39 right over here on Thursday. All right, so yes, sold off by more than 4 to 5% as well. All right, you can see, look at this, looks pretty similar to DBS. I would say it kind of broke that $20. Both of them have the same psychological support, right? So it kind of broke that $20 that it's been holding since June, all right, for about 2 months. It kind of broke that level and went down and closed about 1939. So you can see that from the trend, as I mentioned, it might still be down mid to long term. This red line and the blue line, the 200 days and 100 days moving average are still pointing down. And look at this short term 20 days moving average. This is a bit more defined. You can see that it's pretty much sloping downwards for now, especially when we broke that $20. All right, so the next support I would say for UOB, if you are looking to start to accumulate or get in again or to bargain hunt, yes, it could potentially be somewhere near that $19 to probably about $18.50. You can see that we have been holding above this level. We kind of rebounded from there in April. All right, touched about 1 or 2 times, rebounded from there. We pretty much stayed above that $19 in April and May, right? So this $18.50 to $19, that would be a good support for UOB. If you are looking to start to accumulate, bargain hunt, that would be a good support level. But just take note, of course, if that $18.50 were to break down, we can also potentially see a trade back down all the way to about $17, right? $17 was the low we have seen in March, just when COVID-19 hit and things really escalated, all right? So that would be the recent low. But right now, a near-term support, probably about $18.50 to $19, that's where one can consider to bargain hunt to get in again, to kind of enter some positions, right, for the longer term rebound. So let's take a look at OCBC right over here. We kind of close at about $8.56, right? So you can see that OCBC looks a bit different compared to DBS and UOB, which kind of broke that $20, and there could be some downside. But for OCBC, what happens is we are pretty much back at the support. It kind of like deep and it's like right near the support. So where is the support level for OCBC right now? So you can see that all this while we have been holding above that probably about $8.90 to $9 level for the past 2 months, and we kind of broke it, all right, came down more than 4 to 5% on Thursday as well, and we are pretty much back to this support that has been holding since March, April, and this is about the 840. All right, 840 to 850 level. Look at this right over here. Right, it's been rebounding about 1, 2, 3, and we kind of neared that level yesterday. In fact, I think yesterday the low was about 841. All right, and it kind of rebounded from there and closed at 8.56, right? So OCBC would be, I would say, a little bit more defensive. We are already back to that support level, 840 to 850. So you're looking to accumulate on dips, yeah, probably near 840 to 850 for the longer term. I mean, for any potential rebound back up, that would be a good support level. But just take note, if that 840 level were to break down, we can also potentially hit to the next downside level. I think I mentioned it in other videos as well. All right, and that would be the probably 750 level, right? 750 support level. This $7.50 is ultimate key. Why? Right, 750 has been holding. Look at this right over here. We have been holding above $7.50 since like 2009, more than 10 years, right? Rebounded. So if you're looking to accumulate some, yes, 70. I'm not too sure whether it will go to 750, all right, but if it does go to 750, it will be a very critical support level, and that's where I would expect some good short covering or bargain hunting to come in again, all right. But right now, 840 to 850 would be a good support level if you're looking to accumulate on dips, right? So this is OCBC right over here as of the 31st of July 2020. So yes, we have covered the 3 Singapore banks banks, right? DBS, UOB, and OCBC. So as I mentioned, in most of these banks, the trend might still be down in the mid to long term. So there isn't any clear signs of a recovery, amidst the current situation right now. Right? So if you do get in at some of these good support levels, it's perfectly okay. But just that you want to take note that if it does rebound to a certain level, more than 5-10%, all right, like what we have seen just last month in June, and recovered by more than 5 or 10%, that's where you can also take some profit, get out, probably wait for another retracement back down, right, to probably load up again or accumulate on dips again. Right? If you do like this video, be sure to hit the subscribe button, right, click the bell, click the notification so that you will be notified by YouTube, all right, on any new videos that are out like these. Okay, so go ahead to do that, click on the bell, all right, click on the subscribe button, and thank you so much for watching, and look forward to see you in the next video. Joey here, take care.